Most property investors think the best deals happen on MLS. They scroll through the listings, they set up their alerts, they think they're staying ahead of the market. But here's what I've learned working with investors across the city. The deals that actually change your portfolio aren't sitting on MLS at all. They're sitting off market right now, and they're invisible to everyone who isn't connected to the right people. So in this video, I'm going to show you how this hidden market actually works, why it exists, and more importantly, why having a commercial realtor as a strategic part of your team is the difference between average returns and exceptional returns. So think about it this way. You probably have an accountant, you probably have a lawyer, you might even have a banker or a financial advisor. These people are part of your professional team because they understand specific parts of your financial life. But here's what I see most investors missing. They don't have a commercial realtor as part of that same team, and that's costing them opportunities, so let me explain. Off-market deals don't exist by accident. They're very strategic. Property owners sell off-market for very specific reasons, and understanding those reasons is the first step to understanding how to access them. A property owner might want privacy. Maybe they don't want their employees to know that they're actually selling the property or their business. Maybe they don't want competitors to know that the business is available as well. They might want to control who knows they're actually selling. They want to avoid competitive bidding war where the price gets driven up. And honestly, they want to deal with serious investors, not tire kickers and not just people speculating. And here's a statistic that should grab your attention. According to the Canadian Real Estate Association, approximately 30 to 40% of commercial properties never touch the public market, or MLS. 30 to 40%. They sell quietly through networks and relationships. And that's not a small number. It's a significant portion of opportunity that most investors miss entirely. Think about that for a second. If you're only looking for listed properties, you're competing with every other investor who has an internet connection. You're fighting literally over scraps. The real opportunities, the deals that move quickly and have real value, well, they go to the people who are connected. They go to people who have someone on their team actively working those specific relationships. So how does this actually work? How do commercial realtors access this hidden market? The answer is relationships, and it takes time to build them properly. Real commercial realtors don't find off-market deals by luck. They build them through years of cultivating connections with property owners, business owners, accountants, lawyers, other investors, and people throughout the commercial real estate ecosystem. These relationships become the pipeline. It's not magic, it works. This is what commercial realtors do. We prospect constantly. We call owners. We attend networking events. We build databases of potential sellers. We know the market deeply enough to identify who might sell before they're actually ready to publicly announce it. And when we know a serious buyer is looking, when we understand their criteria, we reach out to those connections first. We're thinking about our clients' needs and matching them with opportunities before the market even knows those opportunities exist. This is why having a commercial realtor on your team matters. You get access to that network without having to spend years building it yourself. You get a shortcut to opportunities that don't appear on public listings. But more than that, you get someone who understands your specific investment criteria and is actively working on your behalf. Now, off-market deals come in different forms. Understanding them helps you know what to look for and what a good realtor should be actively sourcing for you. There are 4 main types, and each type requires a different approach. The first type is what I like to call the quiet sale. An owner is ready to sell, but they want to keep it confidential. Maybe they don't want their employees to know. Maybe they don't want their competitors to know. Maybe they want to avoid media attention, or they want to keep it private for personal reasons. A commercial realtor who knows these owners can facilitate these conversations. They can approach them, understand their needs, and present serious buyers who can handle a confidential transaction. The second type is the owner financing deal. Some property owners want to finance part of the sale themselves. They might want to stay involved. They might be looking for ongoing income. These deals rarely hit MLS because they're structured completely differently than the traditional sale. A realtor with connections knows which owners are open to this type of arrangement and can connect you to them directly. This opens up a completely different set of opportunities that most investors never even consider because they're not looking at the traditional listings. The third type is the portfolio play. An investor or a business owner has multiple properties, and they might be willing to sell a few if the right buyer shows up with the right offer. Maybe they want to consolidate. Maybe they want to focus on a specific area. These conversations happen off-market because they're complex. They need someone who understands both the properties and the owner's goals. A commercial realtor can facilitate these conversations and structure deals that work for everyone involved. And the fourth type is, of course, the distressed situation. A property owner facing financial pressure might sell quietly to avoid bankruptcy proceedings or public notice. A realtor who knows the market hears about these situations early through their network, and they can present opportunities to serious buyers. You get access to deals that other investors don't even know exist because you're connected to someone actively working in that specific market. So what does a real commercial realtor partnership actually look like? Because having a commercial realtor on your team isn't the same as calling one when you want to buy. That's not a partnership. That's a transaction. A real partnership is proactive. It's strategic. It's built on understanding your goals and actively working towards them every single day. I work with investors, and all of my colleagues at the Metro City Property Group, we have a commercial division. All of my colleagues do the same thing. We work with investors who have clear investment criteria. They sit down and they tell me what they're actually looking for. Commercial properties in certain neighborhoods, specific price ranges, particular asset types. Maybe they're looking at residential investment properties. Maybe they want commercial office space. Maybe they're focused on industrial. Maybe they're interested in mixed-use properties where they can have multiple revenue streams, or maybe they're just looking for land for specific development. Whatever it is, they tell me their criteria. And then I don't wait for them to call me. I'm constantly prospecting. I'm reaching out to owners. I'm identifying opportunities. When something matches their criteria, they hear about it before the market does. That's real partnership. A good commercial realtor does much more than show you listings. We understand your financial goals. We know what return you need to make on your investment. We understand your risk tolerance. We know whether you're looking for something with immediate cash flow or something with long-term appreciation potential. We understand whether you want it hands-on or hands-off. And we're actively sourcing deals that fit your specific situation. Here's what you should expect in a real partnership. Regular communication. A realtor who knows your criteria inside and out. Someone who reaches out to you with real opportunities, not the other way around. Someone who can explain not just what a property is, but why it matches your investment strategy. Someone who understands the neighborhood, the market conditions, the growth potential, and how it fits into your overall portfolio. But here's where most investors get it wrong. They think a commercial realtor is only useful when they're ready to buy, and that's backwards. That's actually the opposite of how this should work. The best time to talk to a commercial realtor is before you're actually ready to buy. And I know that sounds counterintuitive, but let me explain. This is the mistake I see most often. Investors wait until they have capital ready. They wait until they're actively looking, and then they call a realtor. And by that point, it's too late. Again, as mentioned, the best partnerships start earlier. Most off-market deals move fast, and I mean like really, really fast, relatively speaking. The owner tells their realtor. The realtor contacts qualified buyers who they already know, who they've already built pre-existing relationships with. The deal closes in weeks. And if you're not already in that conversation, if you're not already in that realtor's radar as a serious buyer with clear criteria, you don't get the opportunity. And that's why waiting until you're ready is a mistake. When you start a relationship with a commercial realtor early, several things happen. First, they understand your goals and your timelines. They know whether you're looking to invest in the next 3 months or within the next year. They know what you're trying to accomplish. Second, they start building your profile as a serious buyer. They know that you're not just kicking tires. You're someone who understands the market and knows what you want. Third, they include you in conversations about deals before they're officially on the market. You get the first look at the opportunities. And fourth, they can advise you on market conditions and, of course, market pricing. You get value before you even make an offer. You get market intelligence. You get insights into what's happening in different neighborhoods, different asset classes, different price ranges. So there you go, ladies and gentlemen. Thanks for listening. That was, in fact, a random publication of shameless self-promotion. I work with the Metro City Property Group in the commercial division, as well as in the residential sales division, and we help buyers every single week. We make those connections. We talk about deals every single week. This is, in fact, how we operate on a day-to-day basis. So whatever you're looking for, reach out. I have a contact sheet on my website at Mark Belanger Realty. Go check it out. Book a call with me. Let's discuss what asset types you're looking for, what price ranges you're working with, what returns you need from your specific investment. What's the timeline? Let's just generally have a decent conversation. From there, we can bucket you into whichever asset class, and then we can kind of do our thing behind the scenes when we're talking to other people on a day-to-day basis. That's how it works. So I'm putting that out to you. Reach out. Let's start a conversation. Let's start that partnership that we were talking about. I hope that this was informative, and I hope it kind of just sets the tone a little bit from an investment perspective. So thank you very much. I enjoy putting these videos together on a weekly basis. You know that. I say it every single week. So until the next video, stay smart, stay invested, commercial or residential. I'll see you in the next vid.